It's a smooth 98.1. Love music, love life. It is a hump of the week Wednesday morning, 33 minutes past 6 a.m. You're tuned into the Smooth Breakfast. Ayokunmi here. Right? Taking you into your workday, more or less. And of course, making sure that you have a great start to your Wednesday, smack dab in the middle of the week. And you know that things have been going on here and there. And it's that time for us to dive into the world of business and take a look at what's been going on Business Express. Join us and share your thoughts with us on what we'll be discussing. We'll be taking a look at the CBN raising the interest rates to 27.5%. So just to give you a backdrop of the conversation, so you know what you're sending your messages on. So the WhatsApp number is 0809 444 0981. 0809 444 0981. That is the WhatsApp number. We're also streaming on YouTube at Smooth 981 FM Lagos. Smooth 981 FM Lagos. You can drop a comment right there. And we are looking at this, like I said. Joining me to have this conversation is Dr. Patrick EJUMEDIA. He is the head of research at Sterling Asset Management and Trustees Limited. Good morning to you, Dr. Patrick. Great to have you on the show this morning.
Yeah, good morning, Ayo. Good to be with you as well.
Absolutely fantastic. Okay, so what we've come here to discuss this morning, the final MPC meeting of the year has come and gone, and the rates
You
have
know,
once again been pushed up, and this has continued on a familiar trajectory for most of this year. The rates keep going up by various basis points over the course of the various MPC meetings during the year. Now, what do you make of the latest decision from the MPC? I mean, did this fall in line with whatever forecast that you had? Because it seems like everyone who has forecast, okay, they'll drop the rates, have been surprised. It's one hike after another. But did this fall in line with your own forecast?
yeah, basically, you will not be surprised when you see or when you hear that each time the CBN had meeting throughout the course of the year, they've increased the rate. And the
Mm,
reason is because inflation too has gone up. Except for 2 months during the year, the inflation came down. For most time of the year, we saw that increased trend in inflation. So it's not surprising. However, for my forecast, I would actually think that there was going to be a hold. A hold because a hold because we saw treasury bill rates going up from 19 to about 23% or 20 to about 23.5%. So that's
okay.
enough is to discourage uh foreign investors, to attract foreign investors and discourage capital outflow. And that's if you check the exchange rate, you also see that it has been stable for a while. So I was thinking that having all this in place, that the CBN would like to put a hold. But I understand in my interviews that I've had with several people to say that I understand the reason for the hike. This is December, and there's also this rush demand for FX, and
Mm.
there's also the rush for demand for goods and services. So these are the factors that I'm sure that the CBN would have put together to say, okay, let's do this for the last time this year, and hopefully we see inflation coming down.
Okay, now talking about inflation, very good that you mentioned that in the last line of your submission there. Now, in a nutshell, we have NPR at 27.5%, October CPI, that's the Consumer Price Index, at 33.88%. Now, how do you assess the quest or the drive to actually bring inflation down, rein it in, because it is choking right now?
Yeah, it is. Everybody is actually complaining, coupled with the fact that we're in this December period. Surprisingly, ideally, we were thinking that because we entered into the raining harvest period, that prices, supply of food is likely to go up, then food prices and prices generally will come down.
Mm,
But unfortunately, that didn't happen because we saw flood, we saw energy prices, and we saw exchange rates, and government has now said that, oh, the major cause of the inflation is exchange rate and all that. But we know that at this point, what we begin to look out for, but coming back to your question, to say that we now need to be looking at the structural issues in terms of how do we increase food supply in particular so that prices can
okay.
come down. So but that's the major issue. Prices are still high, rates is high, and now, particularly now that we are going out of the harvest period, so we hope that what we begin to see is that there will be increased supply of food so that prices can then come down, and we can then have government being able to control inflation as it were.
Okay, interesting thoughts there. So now let's look at this from the point of view. of individuals and businesses? I mean, what does this rate hike mean for them in terms of borrowing? Because that's a very big question and a huge elephant in the room, as it were.
Yeah, basically it depends on it's everybody is complaining at the moment. There's individuals are complaining, even government is complaining. Don't forget that government also had to buy some things at some point and the other. So both individual businesses and government, the whole everybody is trying to feel the bite at the moment. But again, for businesses, it depends on the type of goods that the business is producing. Of course, whether they are producing a goods with inelastic demand, and again, depend on the type of business, whether they are in a business where they can shift the cost to buyers, those who will be buying the commodity. So that's for business. For individuals, again, it depends on your consumption pattern too. So what are you consuming? If you are consuming those things, so what you find for many consumers is a cut in their whatever they are consuming. So that's but for government too, at the same time too, the effect is almost cutting across everybody, because at some point you just need to purchase something. But particularly
Oh,
for
yeah.
business, it depends on two things: the type of goods you are producing and the type of sector that you have found yourself.
Okay. All right. So let me take things down this trajectory now. Despite the high inflation that we're seeing at the moment, and of course all the high borrowing costs that that are on the ground, we still saw quarter three GDP coming at 3.46%. Now, a lot of people have said that, oh, those numbers are at odds with the realities, this and that, back and forth, and so on and so forth. But what do you make of those latest GDP figures?
Hmm. Well, I don't think it's surprising. Of course, you see when prices go up, naturally you see your output go up, and that's why for many people who understand the computation of GDP, they must understand how it is being computed. There's the real GDP, there's the nominal GDP, there's GDP that is driven by inflation and all that. So,
Mm,
of course, it's not surprising, given the fact that again that the sector that is driving the growth of the economy is mainly the service sector, and that sector
okay.
putting in place of the banking sector, putting in the contribution of the oil and gas sector. Then if you look at what came out, I don't think it will be too surprising for anyone.
Okay, okay, interesting thoughts there. Let's talk about the oil sector, because when this administration came on board, oil production was at about 1.2 million barrels per day. Now we are at about 1.47 million barrels per day for the third quarter of 2024. I mean, how do you look at, or how do you view the quest to ramp up oil production, which is very, very key for Nigeria, seen as that is the sector where we derive most of our FX inflows.
Yeah, so that sector has been a challenge for previous administration and every administration that have come in, and of course I'm sure that we all understand the reason why it's so. But if we look at the effort so far, just like I've mentioned, we've moved to a particular from 1.2 to about 1.47 or 1.3
Thereabouts.
thereabout. So the fact that the most important thing is that effort is being put in place to ensure that we grow in terms of the number of barrels that we're producing per day. As one, we hope that some of this effort begin to yield results, and we'll begin to see the impact on the economy. Once those things are done, then it's possible for us to grow beyond whatever level that we are currently in.
That is very, very important when you think about it. Let's talk about the money markets right now. I mean, what about money market securities and fixed income? Now we saw rates on T-bills rise to 23.5% for the 364-day paper at the last auction. Do you think rates are going to continue to rise? Because it seems like everything just keeps on going up and up in Nigeria, no matter where you look.
No, it may not continue. I think first is for the monetary authority to have a sense that they've been able to tame inflation. I think what is important, or what we should put at the back of our mind, is to say that what is the reason for this. And I'm sure that by the time they begin to see a signal that inflation is trending towards the achieved goal, or is coming down, trending downwards, that I'm sure that they will begin to see whether they will put it at hold or they'll begin to bring it down. But as long as we keep seeing this inflation rates going up, I'm sure what the CBN will want to do is to control the major determinants of the inflation, and which are, like I said earlier, is the exchange rate pass-through effect on commodities.
Okay. Now, finally, let's talk about the exchange rate. We can't have this conversation about rates and not talk about the exchange rate. Now, Governor Olayemi Cardoso, he seems to suggest that the CBN is more concerned with stability in the exchange rate rather than the value. Now, NAFEM closed at 1,675 naira to the dollar yesterday, while around 2 p.m. today, that was the day before yesterday, while around 2 p.m. yesterday, parallel market rates were between 1,750 to 1,760. What do you make of those numbers?
Yeah, you've said it all. There must be stability before growth.
Hmm.
So if the CBN is trying to pursue stability, I think they are on course, and I think so far they've been able to achieve that in terms of looking at the rate. If you remember, if you have had conversations with people, a lot of people are already thinking that by now the exchange rate would have gotten to about 2,000, so and all that. So for us to still be around this range that we are currently in, I think the CBN has put a lot of effort to stabilize it. And once they are very convinced that it is now very stable, most important point there.
Okay, you broke up for a few seconds there, Dr. Patrick. I mean, the last thing I heard was once they're convinced it's stable. That was the last thing I actually heard.
Yes, I was saying that once they are convinced, once they get a signal that the exchange rate is stable, then other
Right.
policies to then make it appreciate will then be coming into place. But the first thing, like I said, there should be stability before we can be talking about growth.
Mm. Okay, now let me just put you on the spot really quickly here as we run up the conversation. I mean, what's your economic outlook for 2025? I know the new year is about 2 months away, but I mean it's never too early to begin to project and hear some thoughts. I'd love to hear yours.
Yeah, basically, if you the economic outlook is broad, you'll be looking at a lot of macroeconomic indicators. You'll be looking at things like our GDP, looking at things like our exchange rate, looking at things like inflation, the money market rate, and all sorts of things. So there are a lot of there are a lot of issues when you say economic outlook. There are a lot of issues that one needs to be considering. But basically, in terms of the GDP, we've seen the first 2-3 quarters of the year, and we've seen that despite these policies, they've grown. So it's obvious that for our output, for our GDP growth in terms of annual GDP growth, we may be surpassing some of the forecasts that we have seen, particularly from IMF and other institutions, because we need basically something around 2 point something to get to the 3 point or 2.9 that the IMF said we are going to grow. So we may be surpassing those figures as it is. So in terms of GDP for third quarter, for fourth quarter, and basically for the full year, we may be seeing Nigeria going beyond expectations of many institutions. Other policies, we'll be seeing them as they unfold. But basically, for exchange rates, we may be seeing some form of stability, particularly as we enter into the new year. Don't
Okay.
forget that there might be a bit of low demand in FX, because as we finish the so-called Umba period, a lot of expenses, a lot of demand for excess is likely to go down and all that, except for people that will be going to school and all that. And with this high rate, a lot of the demand for school in abroad has also come down. So we might be seeing some stability, particularly in the first quarter of the new year and all that, because these things are seasonal determined and all that,
Mm.
and that's it.
All right, let's keep our fingers crossed and let's take messages as we end the conversation this morning on Business Express. Tayo says the MBS gave us positive GDP figures yesterday, but the CBN didn't send their report by increasing NPR. Now, businesses will have to buckle up because we're living in vivid imagination. And then he says there's always no connect between monetary and fiscal policy direction to address inflation. Everybody seems to be doing their own and the economy suffers. I mean, we've said this a lot of times that no matter what's going on the monetary side, as long as the fiscal side is not sort of balancing up, then kind of like we're just going round and round in circles. Gilbert Musa says on the improved output in oil production from 1.2 to 1.4 million barrels per day, how real are these figures? Data from OPEC states we are currently underproducing. And more importantly, the impact of the so-called improved data cannot be felt on the average Nigerian way back from 2009 up until date. Well, the average Nigerian will tell you that until they begin to feel the effects of these things, those numbers are just a mirage, as it were. Hopefully, we will begin to feel the effects of whatever it is that the government actually is doing. All right, we need to call it a morning on the show. Thank you so much, Dr. Patrick EJUMEDIA, for joining me the head of research at Sterling Asset Management and Trustees Limited. Thank you for taking the time to join me on the show this morning.
Thank you so much, Ayo. Always good to speak with you.
All right, a pleasure. Have a great Wednesday, and good luck to you in what it is you said you have to do today.
Good. Thank you so much.
All right, and thank you all for being a part of Business Express this morning. Keep you tuned to the Smooth Breakfast right here on Smooth 98.1. Great music will be coming your way as I take you into 7:30 and the papers on Freshly Pressed. All right.